What if you woke up tomorrow and your bank account was gone? No card works, no withdrawals. The money you thought you owned vanished. Sounds impossible? It's not. It's happened before. When a bank collapses, it doesn't just take investors down, it takes everyone with it. From the Great Depression in 1929 to the 2008 financial meltdown to regional bank failures today, every collapse starts the same way. Trust disappears. People rush to withdraw cash, the system freezes, and the money you thought was safe becomes just numbers on a screen. In this video, we'll uncover what really happens when a bank shuts down, why governments can't always save them, and how history shows. The next big collapse might already be closer than you think. If you want more content like this, please like, subscribe, and comment. Don't forget, withdraw your money before it's too late. It always starts quietly. A rumor spreads, a post online, a whisper from a friend. Did you hear the bank's in trouble? People rush to check their accounts. They see withdrawals processing, apps freezing, ATMs flashing, temporarily unavailable. Then panic takes over, lines form outside branches, phones melt down, and within hours, the calm routine of modern life collapses. Because here's the truth, banks don't actually hold all the money you think they do. For every $1 you deposit, they might keep just a few pennies. The rest, loaned out, multiplied through a system built entirely on trust. Once that trust cracks, the whole thing implodes. It's exactly what happened in 1931, when terrified depositors drained banks across Europe, triggering a financial meltdown that turned recession into catastrophe. It happened again in 2008, one bank after another falling like dominoes as fear spread faster than facts. And if it happened then, it can happen again. Faster, louder, and more devastating in a world where panic travels at the speed of a tweet. Imagine waking up tomorrow, trying to pay for food, gas, rent, and your card just declines. Not because you're broke, but because your bank is. That's not fiction, it's history and repeating itself. You walk into a bank and see marble floors, glass walls, and vaults built like fortresses. It feels safe, unshakable. But that security, it's mostly theater. Because the truth is, banks don't hold your money, they hold a promise. When you deposit one, the bank keeps maybe 10 pence. The rest? It's loaned out to someone buying a car, a house, or gambling in markets halfway across the world. And when that loan gets spent, it becomes someone else's deposit, which is loaned out again. Your money doesn't sit in a vault. It's been replicated, stretched, and recycled so many times that it barely exists. This is called the fractional reserve system, the beating heart of modern banking, and its fatal flaw. It works as long as everyone believes their money is there. But the second people doubt it, the illusion breaks. That's what happened during the Great Depression. Banks failed not because they ran out of money, but because they ran out of trust. Customers rushed in to withdraw what didn't actually exist. In 2008, the same illusion collapsed again. Credit froze, banks stopped lending to each other. And once confidence died, governments had to print trillions just to keep the system alive. Our financial world doesn't run on gold or even cash. It runs on belief. And when that belief shatters, everything else follows. When a bank finally collapses, it doesn't start with an explosion. It starts with silence. A frozen screen, a technical error, a message that says, "We're experiencing higher than usual traffic." Behind the scenes, it's chaos. Executives on the phone with central banks, regulators scrambling to stop the bleeding, and traders dumping stocks before the opening bell. The balance sheets don't add up. The loans they made aren't coming back. Investors smell fear, and fear spreads faster than any virus. That's exactly what happened in 2008 when Lehman Brothers fell. A wonder 58-year-old institution, gone in a single weekend. People watched billions vanish overnight. And just like that, the financial system realized how fragile it really was. In 2023, it happened again, this time with Silicon Valley Bank. A simple tweet sparked a digital bank run. No lines outside branches, no crowds, just millions of withdrawals happening online at once. In 24 hours, $42 billion was gone. That's the terrifying part. In the past, a bank run took days. Now, it takes seconds. And once a single bank goes down, the panic spreads to others. Because the system isn't built for failure. It's built for confidence. Without it, everything, savings, businesses, even governments, starts to shake. And when that trust disappears, there's no bailout big enough to stop what comes next. When banks start to fall, governments rush in waving one word like a magic spell: bailout. They promise safety. They say, your money's insured. They inject billions, sometimes trillions, into the system. And for a moment, it works. Markets calm. Headlines say, crisis averted. People breathe again. But here's the truth they don't tell you. Every bailout comes with a cost. When the US rescued its banks in 2008, it printed more money than ever before in history. That flood of new dollars didn't just fix the crisis, it changed the world. It inflated asset prices, rewarded risk, and made the biggest banks even bigger. The same pattern repeated in 2020, when central banks printed trillions more to keep economies alive during lockdowns. And once again, the side effect was inflation. Your groceries cost more, your rent went up, and your savings lost value. Governments don't solve collapses, they delay them. They patch cracks in a dam that's already breaking, and every patch makes the next break even worse. Because when money itself becomes the bailout, there's no limit. Until the public finally loses faith in the currency too. History shows it always ends the same way. First, the banks collapse. Then the money collapses. And finally, the people's trust collapses. Chapter 5. When the system falls. Imagine this. You wake up, check your bank account, and the balance is zero. No explanation, no magic fix, just gone. It's terrifying. But history shows it's not impossible. During the Great Depression, millions of Americans lost everything overnight. Life savings vanished, businesses shuttered, and families were forced into poverty, all because trust in the banks evaporated. Fast forward to 2008, Lehman Brothers. Trillions in value disappeared, pensions and investments were slashed, and governments had to scramble just to prevent a total meltdown. Even today, as digital banking dominates, the speed of collapse is faster than ever. A single tweet, a rumor, a sudden panic, billions can leave an institution in seconds. The lesson is clear. Banks are fragile, and the system depends on belief. When belief fails, chaos follows. But it's not all doom and gloom. Knowledge is your shield. Understanding how banks work, keeping some liquidity in multiple accounts, and knowing historical patterns can protect you. Even when the system shakes, the next collapse may not be centuries away. It may not even be preventable. But history is a teacher, and those who study it are rarely caught completely off guard. So ask yourself, if your bank fails tomorrow, are you ready? Or will you be another face in the crowd, staring at a frozen screen, wondering where it all went wrong?